Recently, Tesla's CEO Elon Musk said he would slash electric vehicle prices again during turbulent times, even though his all-out price war with automaker rivals is cutting the company's own profit margin. Yes, he was prepared for the car price drop. The company has repeatedly reduced prices in the US, China, and other markets since late last year. Why? Let's look at how Tesla is trying to protect itself against competition and economic uncertainty. One day, it looks like the world economy is collapsing. The next day, everything is fine. I don't know what's going on, Musk said. Tesla posted its lowest quarterly gross profit line of 2 years, lacking market estimates as it struggled with aggressive price cuts aimed at boosting demand in a weakening economy fighting a recession. Competition is increasing. The CEO Elon Musk has said Tesla may sacrifice industry-leading profit margins to boost output growth during a recession and keep up with growing competition in China. Tesla shares, which were virtually unchanged in after-hours trading, fell nearly 5% after Musk's comments. The steep price cuts have put pressure on Tesla's auto gross profit margin, a closely watched industry metric. But Musk says Tesla will sacrifice margins to spur volume growth. I think it makes sense to sacrifice profits to produce more cars, he said, adding that if macroeconomic conditions are unstable, Tesla will have to reduce prices. For example, Tesla this year could cut price of the long-range Model Y in the US by a quarter to $50,490. According to media calculations, Tesla's quarterly automotive gross margin, excluding regulatory credits, fell to 18.1% in the second quarter from 19% in the first quarter. That was in line with street estimates, but a far cry from the 26% reported a year earlier. Tesla reported an overall gross margin of 18.2% in the April-June period, the lowest in 16 quarters. Previously, Tesla said in a statement that it was focused on reducing costs and developing new products, and that the challenges of these uncertain times are not over yet. Tesla reiterated its expectation of delivering about 1.8 million vehicles this year, but said output in the third quarter would decline slightly due to planned shutdowns for factory upgrades. That's a good thing, said Thomas Martin, a portfolio manager at Globalt Investments, which owns Tesla shares. They're trying to get the pricing right so they can create demand for the units, and then they want to run their plants as efficiently as possible. They don't want to build up that inventory. It's better to sell more cars at lower margins and capture those profits in the future as we perfect autonomy, Musk said. He said that while the economy remains uncertain, the number of electric markets orders are outpacing production. In the first quarter, Tesla did not disclose its auto industry gross margin, a closely watched number. We expect that the prices of our products will continue to change, either up or down based on a number of factors, the company said in a statement. The manufacturer still believes that its operating margins will remain the highest among major automakers. Shares of the Austin, Texas-based automaker fell 3.7% in after-hours trading. Lower prices along with tax breaks for electric vehicle buyers in the United States and elsewhere drove Tesla deliveries to a record high of 466,000 vehicles between April and July globally, but reduced the company's profits. However, on an adjusted basis, Tesla still earned 91 cents per share on non-core and largely in-line revenue of $24.93 billion. According to an analyst, the company reported a total gross margin of 19.3%, below market expectations of 22.4%. Expected a profit of 82 cents per share, polled by Refinitiv. Chief Financial Officer Zachary Kirkhorn promised in January that Tesla would not let auto gross profits fall below 20% and an average selling price, ASP, of $47,000 for all models. However, Tesla said its average selling price fell in the first quarter compared to the same period a year ago, but did not provide further details. In the United States, where recent federal subsidies for electric vehicles have only modestly boosted sales, Tesla has slashed the price of its cars 6 times this year. Analysts say the electric vehicle maker may have to cut prices further under pressure from prices wars, especially in China, even if its new factories in Berlin and Texas produce cars. Tesla faces stiff competition in China, where it is catching up with local favourite BYD. According to the China Passenger Car Association, China's auto sales growth remained stable in March. Last year, Musk said the world's most valuable automaker would be worth almost zero if it failed to achieve full self-driving capabilities. Musk announced plans to produce new batteries in 2020 to halve the cost of the most expensive part of an electric vehicle, but admitted at Tesla's Investor Day on March 1 this year that the company is still struggling. It is difficult to expand the scale of productation of this type of battery. The long-delayed Cybertruck electric pickup truck is still on schedule for its first delivery this year. But in January, Musk said Tesla planned to begin production of the Cybertruck this summer, but that volume production would not come until next year. Musk is looking to reduce battery costs to deliver on his promise to create a $25,000 car, and fans have been waiting a long time for Tesla to refresh its aging model line. Tesla reiterated that it expects to deliver about 1.8 million vehicles this year. Revenue of $23.33 billion was also largely in line with street expectations. Tesla said profits were also hit by rising raw material, logistics and warranty costs, as well as ramping up production of its 4,680 batteries. Sales of the more expensive Model S and Model Elon Musk said that Tesla Inc.'s aggressive price cuts have boosted demand for its electric vehicles, easing concerns that the weak economy could dampen the interest of the buyer. The company slightly beat Wall Street's fourth quarter revenue and profit targets despite a sharp drop in vehicle margins, and it sought to reassure investors that it could reduce spending costs to cope with the economic downturn and increase competition in the coming year. Tesla's sales outlook amid a weaker economic backdrop is a top priority for investors. The company said it maintains its long-term goal of increasing gross revenue by 50% annually. Musk, who has failed to meet his ambitious sales goals for Tesla in recent years, said 2023 deliveries could reach 2 million vehicles if there are no outside disruptions. Tesla said its auto margins, which fell to a two-year low of 25.9% in the reported quarter, will stay above 20% under pressure from rising related costs. Accelerated battery production and new factories in Berlin and Texas, as well as higher costs, material costs, logistics, and warranty. Analysts say Tesla's goal is to be optimistic in the face of macroeconomic uncertainties. I think we're going to see a serious decline in consumer spending, and I think auto is going to take a big hit, said Edward Moyer, senior market analyst. Tesla said it did not expect significant near-term output growth from China, as its Shanghai factory was operating near full capacity, recovering from production problems earlier this year. Profit margins are generally expected to come under increased pressure due to aggressive price cuts. Tesla, which has implemented a series of price increases since the start of 2021, reversed course and introduced price cuts in December in the United States, followed by discounts of up to 20% this month. The company's net profit per vehicle of $9,000 in the latest quarter was more than 7 times higher than Toyota Motor Corp's equivalent figure in the third quarter, but that's down from nearly $9,700 in the third quarter. The company's stock suffered its worst decline last year due to concerns about demand and Musk's acquisition of Twitter, which has raised concerns among investors that he would be lured away from running Tesla. Musk has dismissed polls suggesting his political comments on Twitter are damaging the Tesla brand. I may not be famous to some people, but to the vast majority of people, my number of followers speaks for itself, because he has 127 million followers. The company said it had revenue of $24.32 billion in the quarter ended December 31, compared with the average analyst estimate of $24.16 billion, according to IBES data from Refinitiv. There will be bumps along the way, and we will probably have a pretty tough recession this year, said Elon. We think demand will be good, even though the overall auto market will probably contract. Amid the chaos, shares rose 5.3% in extended trading. They ended the fourth quarter with 13 days of vehicle inventory, more than 4 times more than at the beginning of 2022, a record value of $12.8 billion USD. What do you think about the current downfall of Tesla? Do they need to come up with new EV reforms to rise back? Comment your thoughts, hit the like button, and don't forget to subscribe for more. Until next time, see you.